The Federal Reserve just raised interest rates and the major U.S. indices are up a couple percent. Investors are wondering if this is the start of a major bull market. And you see, look, this is the first time you see interest rates raised by the Federal Reserve since 2018. In anticipation of this, you already saw several $100 million move into more speculative vehicles like Cathie Wood's flagship fund. And here it is, you see folks like JP Morgan talk about how the correction is almost over, suggesting that the rout in tech, biotechnology, emerging market stocks may nearly be over. And this is really warranting the question, is this really the start of a new big bull market? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice. And so my take on it as I look at this is, look, the economy is red hot. You see jobless claims at a multi-decade low. You're looking at red hot inflation. The reality is probably around 10%, super high inflation, super low interest rates. And the Federal Reserve is effectively saying, yeah, by the end of this year, maybe we're going to have rates around 1.75%, maybe around 2%. So looking at nearly every meeting from here, potentially raising rates by another 0.25%. Now, interesting to see that their own expectations, keep in mind, this is from the Federal Reserve, their own expectation is that rates do continue to go up, maybe between 2.5% and 3%, but that longer term, it actually comes back down, maybe suggesting an economic slowdown in the future. This is interesting to suggest, hey, even if inflation's really, quite high, we're never actually going to have to raise rates significantly. This says, hey, we really do think inflation is going to come under control. Now, in an attempt to establish price control is this 1.75% that they're targeting by the end of the year, because the reality is, as you look at current interest rates, if you look out up to a one-year treasury, it's currently yielding around 1.3%. So they're trying to say, hey, by the end of this year, we're going to raise rates well above where they are today. So this could imply that the Fed is willing to fully invert the yield curve potentially, if it means, potentially keeping inflation in check. So we'll see. Another big aspect that Jerome Powell, commented about is that the Federal Reserve is so confident in the economy. They also expect to start unwinding their massive balance sheet. And this is I'd argue the big takeaway from this is that Jerome Powell and the Federal Reserve, they're just so confident in the strength of the U.S. economy. No problem, keep raising interest rates. We're going to tackle inflation. Inflation's going to come down over time with supply chain pressures unwinding. So it's a very sort of rosy attitude, rosy view, and that's part of the reason why you're seeing equity prices, respond, saying, hey, this is not going to be a super tight conditioning. This is not going to be a devastation for the market. Hey, they're going to be in a position where they can easily, raise rates, can easily unwind their huge balance sheet. And their balance sheet, look how much it's grown since COVID started. You're already looking at a $4 trillion balance sheet. Then it grew to $9 trillion. So you're talking about potentially unwinding, let's say, $5 trillion over time. That could be a huge, tightening, monetary tightening for the economy. But we'll see how that plays out. Now, not everyone agrees. Not everyone agrees with the Federal Reserve. You see, effectively the former Treasury Secretary Larry Summers, effectively calling out a couple of different opinion pieces, saying, look, the stock market, like the Fed's plan to raise interest rates, it's wrong. Previously calling out how the Fed is charting a course to stagflation and recession. Really what's going on here is he's saying, look, they're not going to do enough. They're not going to raise rates fast enough to ultimately combat inflation in the short term. And now, yes, raising rates quicker to deal with this inflation could potentially hurt the stock market and the economy a lot quicker than folks expect. And so that is a key component, for investors to consider is, folks like Larry Summers. And I'd argue he was spot on with the macro analysis in the last 2 years, effectively saying, look, there's going to be inflation. It's not transitory. And as the Fed is saying, yeah, we're expecting inflation higher for longer, they're not raising their expectations for raising rates, which he thinks is a big problem. It means he thinks you're going to be seeing stagflation and inflation. So effectively a weakening economy, recession, along with inflation in the years ahead. And that would be really, really hard on the equity markets. Now, what do I think from here? Where do I think, things go from here? What's my personal take? I think there's a couple of different, aspects to consider. The first aspect is in the short term, day to day, no one really knows how it's going to play out. I wouldn't be surprised to see a continued, equity rally. Let's say you get to the long-term averages with some of the major indices. That said, no one really knows what's going to go on short term, day to day. You can have a major news, geopolitical political tensions shake up out of Ukraine that could cause, oil prices to go to 200 or something like that, that, would obviously impact short-term prices. So short-term, it's tough to say. Wouldn't be surprised to see this rally continue. That said, I am very cautious thinking about this, because if you take a step back and you look at let's say the major asset classes and how they're trending, looking at, let's say, relative to 200-day moving averages, longer term trend indicators, you're looking at only really like a couple of different sectors, really 3 at this point, that are actually favorably trending right now. And it fits with what Larry Summers called out effectively about stagflation, effectively seeing a weaker economy but higher inflation for longer. And those sectors are gold, that's, a price above trend, oil, price above trend, and effectively mining companies. So all these companies that are effectively banking on continued inflation, continued, shortages in commodities. And so, or effectively looking for a flight to safety from, fiat currency. And that's why, gold might be getting a bid. And there's a broader thesis there that I talk about with the Unrivaled Nation. And so I'm looking at this, and you compare this to other major assets like the NASDAQ, like the S&P 500. And the reality is these are still trading below their 200-day moving averages. They're still below trend. So, if in order to get really confident, I would say you'd want to see that price action improve significantly. That's the way a lot of hedge funds and a lot of traders, I think, are looking at this environment. So it might be potentially sell the rally type of environment. My personal view, and look, the way I personally, everyone has to have their own investment journey. Hedge funds have a much shorter time frame. You have traders that are thinking about swing trading it. My personal view is focus on one stock at a time, try to find an unrivaled business, and try to pay a sensible price. You see what Warren Buffett's doing, buying Occidental Petroleum, buying, a couple $100 million every day, something like over $1 billion this week. And I think that fits with it's an affordable security with higher oil prices. It trades at like 2 to 3 times. So that's part of the reason why he's, increasingly buying more and more. And it also fits with this broader aspect of this might be a secular run with oil. And he's also seen what happens during periods of high inflation. And during periods of high inflation, things like oil and gold can hold up very well. Now, if you want to continue this conversation and you're interested in joining a community of like-minded investors trying to find exceptional companies, potentially unrivaled investments, check out unrivaledinvesting.com. Click join the journey. I'm interactive on our exclusive server on Discord on a regular basis. And I'd absolutely love to hear your thoughts on what do you think of the market. Has Jerome Powell set off a new bull market? I'm personally skeptical. I'd be very surprised to see, let's say, new highs. We'll see what happens, though. That's more of a short-term expectation. Most of my focus, though, continues to remain on the individual companies, trying to find those exceptional compounders that could potentially go up over time, hundreds or even thousands of %. If you enjoyed this video, please make a point of hitting that thumbs up, hit that like button. Thanks so much for subscribing.